Okay, let's move on now from Orchid Pharma. Let's address what's happening with the Brigade Group and let's try and get a better sense of where their business is headed. We've got with us Atul Goyal, the CFO, joining in on the show right now. Atul, hi, morning. Good to have you on ET now once again. Since the last time we spoke with you, a lot of activity has happened on the business development side for you. Talk to us about, your future launch pipeline. How's that shaping up? And when are these projects going to be launched?
Morning. See, the major purchases which we have done is Hyderabad and lot of purchase from Chennai also. So all this project which tantamounts to around 6 to 7,000 crores, and this all projects may be launched in Q1 next year or maybe Q2 next year. So we are very hopeful that if the market remains the same, all these project launches will be definitely be launched as early as possible. The market is right now very good, and as you see, we can see price rise, we can see the sale. So we should be very good going ahead from here.
Could you spell it out in numbers? What's the visibility you have on the trajectory of, revenues, margins, and profitability from these projects?
See, I'll just come to you about the launches. Launches is around 11.5 million is what we are seeing in next 4 quarters, and this 2 quarters we may launch around 7 million or so. So launches are very firm, and they will be done accordingly. Revenue, see, as far as residential is concerned, it will be mainly on the registration of the properties. So it's very difficult to estimate, but overall, I think we should do a overall revenue at the year end of around 28 to 30,000, 3,000 crores also, 2,800 or 3,000 crores.
Yeah, those numbers. Recently, there was also a change in the SEZ norms, right? The government has now allowed floor-wise denotification of SEZ area. Since around 70% of your leasing portfolio is in SEZ projects, help me understand, how do you view this development?
Good development. Developers have been waiting for that for last 1 or 2 years. But for us, we already, of majority of our SEZ leasing portfolio has been already leased. It's only zero point 0.9 million, zero point 0.7 million, which is there to be leased, and there also we have good global capability centers which are interested to take. But yes, this is a very good move. But one developer will have to see as to will have to do a calculation of cost benefit analysis as to what is the vacancy in his SEZ area, what is the lease rent he can get up, because he'll end up paying whatever tax advantage he has taken from the government. So you'll have to pay that. Then you will have to see what is the incremental rental you are getting, and then whether it makes sense in IRR. So all this will have to be calculated and see. Yes, of course, where for us, since our leasing vacancy is very small, I don't think so we may go for this.
I also wanted to get in the visibility on the real estate industry from you, because it's been a record 2022. We're closing in on 2023 with another record year. You think 2024 can beat what 2022 and 23 did? Tell me how some of your launches are performing in the key markets. What's the footfall expectation?
See, right now euphoria is there, and markets are doing very well. In fact, if you see any research report, they say absorption is much more than the launches which are there by the companies. And of course, if you see in Bangalore, especially, your stock is less than 10 months. So this says as to how much sales are going in, and you see the price increase. Your base price has changed. Your price increase in 9% increase year on year. So I think this market should stay there with the economic activity which is happening in the country, and with the stable government, what it looks like for 2024. I think there is a good markets, the good real estate market which will be here, both in residential, maybe leasing in offices, and as well as hospitality. We are in all these sectors, and we are very confident that all these markets should do very, very well.
Okay, interesting. What about the residential segment as well, per se? Because one has seen very strong pre-sales in Q2. What levels do you hope to end FY24 with? And, what is it that we can anticipate after you already surpassing 4,000 crore rupees in FY23? You think the FY20 number, 24 number could be, say, above 5,000 crores?
Yeah, it can be. Definitely, it can be. We are very hopeful, and that is what we are budgeting for. But residential market is going to do well the way our new launches are there. In fact, there's a change in thought that whether you should launch, you should sell everything on one day, or you should stagger your sales with a price increase. So it is about the market. Real estate cycle has come after 7-8 years, and I think it should stay for next 4-5 years. That is what we think, but it's very difficult to estimate the market. But we are very hopeful that it should be very good.
Also highlight how the leasing and hospitality segments are shaping up for you, and what's the expectation, say, for the first half of the next fiscal?
Leasing is doing very, very well. Uh, I know SEZ has been laggards, but we didn't have much vacancy in SEZ, so we have not faced this issue. In non-SEZ, we don't have any vacancy, 100% in leased. So we are very hopeful with the going forward. Office market in Bangalore, Chennai, and Hyderabad should do well. And we think that though Hyderabad is bit problematic because of the over supply. But we think if it's a part of integrated development, we have a WTC license for Hyderabad. So we are very, very clear that we need to build one building which can be part of integrated development, where we have taken the space right now. If you see the research report, 16 million square feet is the absorption in leasing. So I don't think so. There has to be a challenge with SEZ problem solved with the new notification. I think leasing vertical should do very well. As per hospitality, we had a very tough time in COVID, and now hospitality is doing very well. We will be closing more than 400 crores of revenue this year with an EBITDA of 150 crores. So that is how hospitality is doing, and we see that this should grow more because international travel has not come at a pre-COVID level. So we think hospitality going forward should do very, very well.
Morning, Mr. Goyal. Avan is well joining in on the discussion, and I wanted to get in a sense as to what the outlook is on the residential segment as well, because now that is a segment that is debt-free, and the debt on the office assets has remained steady. So are you comfortable with your current debt levels?
Yeah, we are definitely comfortable with the current level. We are 0.72 equity. Even if we have to raise some debt for the office vertical where we are going to do the construction, we are not averse. But definitely, residential will try to keep it zero. If the sales continue like this, the cash flow will come in, and definitely we will like to keep it zero. Overall, of see if after the cash equivalent which is there in the company, we are at 2,500 crores of debt, which is very, very comfortable for us.
Okay, thank you for taking time out and giving us your growth projections as well as outlook. That's the word from the management of Brigade Enterprises. Projects worth 6,000 to 7,000 crores will be launched in Q1, Q2 next year, and they are looking at euphoria within the real estate market that is well placed. Tell you what, we'll take a very short breather right here.